Hello everyone, this is paper 8 of intermediate group 1 cost accounting paper. Okay, so it has total 6 modules. So I thought of starting from the first module, that is introduction to cost accounting, as it would be the foundation or the base of this whole subject. And in this first module we have 5 subsections, 5 submodules, and the pages are from 3 to 58. So approximately 55 pages are there for this first module. Okay, so today we'll cover 1.1. So as before we are going into the depth of the cost accounting, what are all the cost accounting principles, techniques and all, but we must be aware of like how, from what is the history of cost account, how it got involved. Okay, so first is in 11th standard, like I had in my 11th standard, like how double entry system, in which year it was formed, and it was formed in the year 1494. Okay, the same way here it's mentioned that after that industrial revolution took place. So during those times this cost accounting was considered as a small branch of financial accounting. Okay, then the period of 1880 to 1925, all the industries got evolved. Okay, it was known as science management movement, like science was given more priority, like new technologies, scientific research were all done. And this was the era of like DuPont and General Motors came into existence. Later, World War One and World War Two happened, so automatically the defense expenditure increased a lot. So some of the governments they used to purchase or procure this defense equipments on a contract that was like cost plus contract. In India, prior to independence, like 1947, there were few cost accountants who were basically qualified from CIMA London, okay, ICMA London Institute. But as during the World War One and Two happened, the need for developing this profession took place, as some of the defense members used to stay in the Kolkata location. So they formed this Cost and Works Accountants of India Act 1959. So it was earlier known as ICWA. Now the evolution, it was more progressive, as the Companies Act 1956 had cost audit session introduced as per section 233B, and in Companies Act 2013 same the section was changed to 148. Okay, so this is the evolution of cost accounting. Now there are few basic definitions. What is costing, what is cost accounting, what is cost accountancy? So these three terms are mostly used interchangeably, that is costing, cost accounting and cost accountancy. But first we'll look what is costing. Costing is often used as a qualifying adjective. How we use adjectives? Adjectives like if we say like this is a beautiful scenery, this is a warm scenery, this is a cool scenery, this is wonderful scenery. So the wonderful, beautiful, warm, calm, all those adjectives, they are known as adjectives, right? The same way, costing, the word is used as with some qualifying adjective, like prefixed with standard costing, job costing, batch costing, process costing, such a way. Okay. Now we have cost accounting. Cost accounting is like, it is like gathering cost information to the cost objects. Like we just, if we are looking after this chair, so we will first of all gather like what is the cost information, and then we'll look like what is the standard or the budget assigned, or what is the actual, and whatever the variances or the profit is there, that is known as cost accounting. Simply cost price minus profit, cost price plus profit is equal to selling price. Okay, so this is cost accounting. Okay, now what is cost accountancy? So cost accountancy means like our subjects were known as accountancy in 11th, right? So it is a academic discipline. Okay, it's a subject. So this both are used in cost accountancy, costing as well as this cost accounting techniques. Okay, it's also in science and also in art, where we can control the cost, and where we can analyze, we can increase the profit. So this is cost accountancy, and it helps in decision making. Okay, now we have objectives of cost accounting. So simply cost accounting, as I told, cost price plus profit is selling price. So what is the cost accounting objectives? To find out the cost of the unit, to control the cost. Okay, now to know which department earns profit more, to fix the selling price. So this is the main objective of cost accounting, and wherever what is the wastages in all those process, that is to be checked. Also this helps in the decision making process. So these are the basic objectives of cost accounting. Now scope of cost accounting. For this you can remember the word bakra. Means the spelling would be different for the words goat in Hindi, but to remember this you can remember this word BAACCRA. Okay. So the scope of cost accounting means that the areas where this cost accounting is vast and is defined to. Okay, so first is B, bookkeeping, then ascertainment of cost, analysis of cost, then comparison of cost, then controlling the cost, preparing the reports, and then last is the cost audit. So you can remember this with the acronym BACRA. Now in this first module, first part, we have cost accounting system types. Okay, so what all systems could be followed? So there are about 5 systems. So the first is like historical cost accounting system, like historical costing. So this is historical, history. History refers to past cost. In this system, the costs are ascertained once they are incurred. Okay, so it's like past. After incurring, we consider like, okay, one, if we are manufacturing a table, so after the cost is incurred, we can say like this table cost is around rupees 8,000. Okay, so this is a part of historical costing. Okay, we are doing just post-mortem, and in this it's too late to control because we have already incurred. Now the other is absorption costing. In this, all costs are absorbed. Now let us check what all costs are absorbed. That is variable cost. Variable refers to the direct labor, the direct expenses of labor, direct expenses of material, and related direct expenses. This all comes under variable cost, plus fixed manufacturing cost. Okay, fixed manufacturing cost. Now what will be under the fixed manufacturing cost? It would be like rent of the factory, depreciation, all those will come under fixed manufacturing cost. This will be considered the part of the table's cost. Okay, variable means the labor, the time taken for the carpenter to make that table, the material like the wood used, and the other expenses. Maybe like he might have asked some consultancy, he might have taken some interior designer consultant fees or somewhat like that. So this all would come under variable cost. Now carriage inward or freight inward, insurance charges to bring that table, such are known as direct expenses. Now fixed manufacturing cost refers to the manufacturing cost which is fixed in nature. So like the rent, as I told, the depreciation. So this would come under like and other than that, like selling expenses, marketing expenses, or you can say office administration expenses, this will not be charged under the product table. Okay, this would be considered in the P&L account. Now direct costing refers to, direct and variable costing are same. Okay, so here direct labor, direct material, and direct expenses are only considered, and others all, here fixed manufacturing cost is not included. Okay, others all are charged to P&L. Now standard costing. Standard costing is like, standard cost refers to a predetermined cost. Like we already have a calculated predetermined cost, like how much would be the cost for manufacturing a product, and if there is any variance in the actual cost which has incurred, then that is known as standard costing. That way of costing is known as standard costing, where variances are measured and which are very helpful for control. Another is uniform costing, which is like a common, uniform refers to common system across all the firms of the industry or given industries are using same type of costing. So this would be very helpful for comparison and all those purposes. Right? So these are different types of cost accounting system. Okay, now we have limitations of cost accounting. Like we said, we checked like what are the objectives, what are the scope, what are the cost accounting system. Now what is the limitation of this cost accounting? This cost accounting is very expensive, okay, and there's a difference in the financial accounting result and cost accounting result. Different peoples have different views. The exactness is very different. There is a lack of exactness in the calculations because the costs are classified differently by different people, and allocation, segregation, whether the cost is considered as a fixed or variable, that differs. So there is no uniformity. So these all are the limitations of cost accounting. Now in our study material, we have differences given between financial accounting, cost accounting, management account, financial accounting. So I have made it 3-in-1 consolidated table. This is going to help you a lot. So financial accounting, cost accounting, management accounting. So the purpose here is to provide the business activities result as a whole, and here the purpose is to plan, control, and also for decision making. Management accounting is mainly for decision making. Okay, managers are appointed for decision making. In the same way, management accounting is for decision making. This is legally mandatory. This is maintained by management. There is no statutory requirement to carry out management accounting. Okay, now the users are here external, internal, investors, government, stakeholders, everyone uses the balance sheet and P&L and financial accounts, right? Here the user is management, here also the user is management. The information here given is quantitative, like in numbers, here also quantitative. Here the decision is given, so both in numbers, trends, graphs, everything is quantity plus quality. Here the profit of whole business is analyzed. Here the profit is per the cost center, cost object, cost unit. So as per job, product, process, service differs. Okay. Here profit is not known, but it helps for knowing like what is the profitable strategy that can be used to gain more income. This is done the accounting is done yearly, half yearly. More frequent cost accounting is done like maybe daily, weekly, monthly, and this would be as per the management. It might be like around 3 to 5 years. The stock is valued at net realizable value or market value or cost, whichever is lower. Here it is valued at cost, and there is no such rule in here in management accounting. This is an independent, but this is dependent on management accounting. This is dependent on both financial accounting and cost accounting. This is independent. Okay, it is not dependent on any of the accounting. The target here is like past. We here check out like what is the P&L status or balance sheet, the stock status or the asset liability status of the past. Here both past is also checked, present is also checked. Here it is useful for more future decision making. Okay, so here the 1.1 module ends. Okay, I hope this would help you a lot in revising and recalling things. So if you liked, do share with your friends and subscribe the channel.